Welcome to the deep dive. If you've ever thought about expanding your business horizons globally, or maybe just wondered how some nations manage to carve out such a premier spot on the world economic stage, well, you're definitely in the right place. Today, we're plunging into the United Arab Emirates. It's a country that has truly, really, solidified its position as a global business hub. Fascinating story, really.
Absolutely, driven by, its location, amazing infrastructure, and some remarkably forward-thinking economic policies.
Exactly. And our mission today is to give you a shortcut, a real insider's look at something absolutely fundamental if you want to operate in the UAE, getting the right business license. We're going to pull back the curtain on the three main categories: that's commercial, professional, and industrial. We'll break down what makes them tick, what you actually need to do, the process, the costs, which can be surprising, and really importantly, the strategic side of things for you.
Yeah, the goal is really to highlight what's most important, help you connect the dots for informed decision-making.
And right off the bat, okay, before we get into the weeds, we absolutely have to talk about the UAE's unique business setup model, this mainland versus free zones thing.
Hmm.
It's not just a detail, is it? It seems like the foundation for understanding everything else. It shapes the whole journey.
It really does. And what's key here is that the license itself isn't just, paperwork. It's the actual legal document that makes your whole operation legitimate. Your official passport to doing business, so to speak.
Yeah.
It means you're following UAE civil law, commercial law, even criminal codes. And that official stamp, well, it gives you instant credibility. Super important for building trust with customers, suppliers, and definitely investors.
So without it, you're kind of operating in the shadows.
Pretty much.
Yeah.
Invisible in the formal economy. Having that license is what truly opens the door to the whole UAE market. And that market, well, it comes with that very attractive tax environment and the strong banking system everyone talks about.
It feels very deliberate. Like the government's focus on transparency and regulation isn't just talk, it's a core strategy to pull in foreign investment, right?
Absolutely deliberate. And it goes further. You see things like mandatory beneficial ownership registers now. That's all part of the bigger picture combating money laundering, financing of terrorism. It boosts investor confidence globally because it signals financial integrity.
Okay, so underestimating the license step is a big mistake then. What's the common pitfall there?
Yeah, the biggest mistake is seeing it as just a one-off fee, a hurdle to jump, instead of seeing it as the actual foundation your business is built on, day in, day out. Proper licensing isn't just about ticking a box for compliance. It's about building a trusted brand from the get-go in a market that values regulation.
That makes total sense. Okay, so back to that core idea. Mainland versus free zone. You mentioned this dual system. How does having these two tracks really help different kinds of investors? Seems like a smart balancing act.
It is. Very much so. Let's break it down. Mainland companies, right? They get their license from the Department of Economic Development, the DED, in whichever emirate they choose. Dubai, DED, Abu Dhabi, DED, and so on.
Okay.
The huge plus. They can operate freely across the entire UAE, no geographical limits. They can deal directly with government bodies, local consumers everywhere. If you want broad market reach, Mainland is the way.
And free zones.
Free zones are different. They're regulated by their own independent free zone authorities. Each zone kind of has its own rules. The big draws are usually 100% foreign ownership, which used to be a massive differentiator, plus tax exemptions and full repatriation of profits and capital. You make money, you can send it all home, no problem.
But there's a catch?
The trade-off, yeah. Generally, free zone companies are restricted to operating within their specific free zone. To do business directly in the mainland market, you often need a local distributor or maybe set up a mainland branch office.
I see.
So, strategically, this dual system is clever. It offers that wide market access via the mainland, but also these very attractive investment bubbles, the free zones, to pull in foreign capital and diversify the economy. It caters to different needs.
A sophisticated playbook, definitely. Who are the main regulators then? We've got the DEDs, the Ministry of Economy you mentioned, and all these free zone authorities. Sounds potentially confusing for someone new.
It can be, yeah.
Yeah.
The DEDs are key for mainland licenses handling, like over 2,000 different business activities. Then the Federal Ministry of Economy has oversight, approves trade names nationally, handles things like patent registrations.
Okay.
And then each free zone authority is its own regulator for its zone. So while there are similarities, the specific rules, the paperwork, the costs, they can really vary. That's why figuring out the exact right authority for your activity and location is step one. And
Yeah.
honestly, getting expert advice here is usually a good idea. It's not always straightforward.
Good advice. Okay, so The type of license really hinges on what your business actually does. It generally falls into one of three buckets, right? Starting with maybe the most common one people think of, buying and selling stuff. Let's get into commercial licenses or trade licenses.
Exactly. Commercial licenses are for businesses involved in, well, commerce. Buying, selling, trading tangible goods, or sometimes specific services tied to trade.
Like what specifically?
Oh, it's broad. General trading, import-export obviously, wholesale, retail, real estate activities, logistics, transport, even contracting services fall under this.
And I heard something interesting about Dubai, that you can have multiple activities under one license. That sounds incredibly efficient.
It is, that's a great point. In Dubai, often you can bundle up to 10 distinct trading activities under a single commercial license. It's a huge plus for cost saving and just making operations smoother, especially if you deal in various related goods.
Wouldn't have expected that flexibility. Okay, requirements. What do I need for a mainland commercial license?
Typically for mainland, you absolutely need physical office space. And proof of it, like a registered tenancy contract that's the Ejardi system in Dubai. Virtual offices usually won't cut it for mainland commercial. And depending on your legal structure, like an LLC, you'll need a Memorandum of Association, MOA.
Right, the LLC structure. And wasn't there a huge change recently regarding foreign ownership on the mainland? That used to be a big hurdle.
Oh, massive change. Game changer, really. There was a federal law a few years back, the FDI law, that basically flipped the script. It allows up to 100% foreign ownership now for many, many mainland activities outside of certain strategic sectors. That old rule about needing a 51% local Emirati partner, gone for most businesses.
Wow, okay, so that really levels the playing field with free zones in a way.
In terms of ownership, yes, absolutely. It makes mainland much more attractive for foreign investors who want full control. Free zones, of course, always had that 100% ownership and full profit repatriation as key selling points, and they still do. Plus, free zones are generally more flexible with office space. You can get fully serviced offices or just flexi desks, even virtual offices, which works well for some trading setups or freelancers.
Okay, process time. Say I'm ready. How do I actually get this commercial license? What are the steps?
It's a fairly structured process designed to be efficient. First, nail down your exact business activity. Then, choose your legal structure, LLC, sole establishment, etc. Register your trade name, make sure it's available and compliant. Apply for initial approval, sort of a pre-check.
Okay.
Then, prepare your MOA, or if needed for certain structures, a local service agent agreement. Choose your physical business location and get that lease agreement. Submit all the documents, pay the fees, and then, usually within a few days to maybe 2 weeks, if everything's in order, you get your license.
And the cost. Let's talk ballpark figures for that initial license fee. I know it varies.
It does vary, yeah. For a Dubai mainland commercial license, you might be looking at, say, AED 11,000 to 35,000 initially. A general trading activity might be around AED 15,000 within that.
Oh.
Abu Dhabi and Sharjah mainland are often in similar ranges, maybe AED 10,000 to 30,000 or 15,000.
And free zones.
Free zone commercial licenses. Well, they can range quite a bit depending on the zone and the package. Maybe AED 7,000 up to AED 30,000 per year. But remember, and this is crucial, these are just the license fees. The total cost to get set up is usually quite a bit higher. We should definitely circle back to that.
Right, the hidden costs.
Yep.
Always the way. Okay, so strategically for a commercial venture, what's the main takeaway? Mainland versus free zone?
It's that balancing act. Market access versus ownership and incentives. Mainland gives you full, unrestricted UAE market access, and now often with 100% foreign ownership. Best of both worlds, potentially. Free zones still guarantee that 100% ownership, full profit repatriation, often easier setup for certain things, maybe better for specific import-export logistics depending on the zone, but you might need that local distributor for mainland sales. Both benefit from the tax system, though that 9% corporate tax only kicks in above AED 375,000 profit. Below that, zero.
So it really depends on your business model and how vital direct mainland access is.
Precisely.
Okay, that makes sense for trading. But what if your business isn't about physical goods? What if it's about, skills, expertise, knowledge? That leads us to the second pillar, professional licenses or service licenses.
Exactly. These are for businesses built on intellectual capital, specialized skills, talent. It's a huge and growing area in the UAE.
What kind of activities fall under this?
Oh, loads. Think consultancies, business, legal, IT, marketing, tourism, IT services companies, law firms, accounting firms, auditors, design studios, graphic, interior, web. medical clinics, educational institutions, even things like beauty salons, repair shops, safety services, document clearing services. If you're selling a service based on expertise, it's likely professional.
And these seem quite flexible. I've heard you can sometimes operate from home or online, not just a physical office,
Oh.
especially for freelancers.
Yes, that's a key feature and a big draw. Depending on the specific activity and jurisdiction, there can be flexibility for physical offices, home-based setups, or purely online models. It really taps into that modern service and gig economy. And you mentioned freelancers. Free zones are particularly good at catering to them with specific packages.
And if it's a partnership, not just one person.
If it's owned by more than one individual, it's typically registered as a civil company on the mainland.
Okay. Requirements for mainland professional license. Is it still 100% foreign ownership?
Yes, mainland professional licenses generally allow 100% foreign ownership. However, there's a key difference from commercial. You usually need to appoint a UAE national as a local service agent, or LSA.
LSA, what do they do? Do they own part of the business?
No, that's the crucial part. Unlike the old local partner rule for commercial licenses, the LSA has no equity stake and no liability in the business. Their role is basically administrative handling government paperwork, liaison. You pay them a fixed annual fee for this service.
Oh, okay. So it's an administrative requirement, not an ownership one.
Exactly. You also need to provide proof of your professional qualifications, degrees, certifications, experience relevant to the service you're offering. And generally, yes, you still need a physical office space with that registered tenancy contract on the mainland, though some specific activities might have exceptions.
And in the free zones for professional services.
Free zones are very straightforward here. 100% foreign ownership, no LSA required. They're really popular for consultants, creatives, tech professionals. You'll likely need a solid business plan and, again, proof of your qualifications. And as we said, virtual offices or flexi desks are very common and accepted for many professional activities in free zones, especially freelancer setups.
How does the application process differ then with that LSA involved on the mainland?
The basic steps are similar. Identify activity, choose legal structure, often sole proprietorship or a civil company, register trade name, get initial approval. But that step of appointing the LSA and getting the formal LSA agreement notarized is a distinct mandatory part of the mainland process. And for civil companies specifically, all the foreign partners usually have to appear in person before the notary or court official to sign the agreement. It adds a layer of legal formality.
Got it. Costs for professional licenses.
Ah.
Higher, lower.
Often, the initial license fees can be a bit lower than commercial, but it varies. Dubai mainland, maybe AED 7,000 to 28,500 initially. Abu Dhabi and Sharjah mainland are in comparable ranges, though Sharjah sometimes adds security deposit charges based on activity, which can push it up.
And free zones.
Free zone professional licenses can range widely, say AED 10,000 up to AED 50,000 or even more per year, but often these packages include things like your flexi desk access or a certain visa allocation, so you need to compare the total package value.
So for a skilled professional thinking of setting up in the UAE, what's the big strategic appeal?
It's that powerful mix. 100% foreign ownership combined with significant operational flexibility, especially in free zones. It makes the UAE incredibly attractive for global talent consultants, designers, tech gurus, you name it. You get the credibility of being licensed, you can sponsor visas for your staff if you grow, and you have that 100% profit repatriation. It's a really strong value proposition for service providers.
Okay, makes sense. Now for the third pillar, industrial licenses. This sounds like it's for the makers, the manufacturers. Very different from trading or services.
Completely different beast, yes. Industrial licenses are mandatory if you're involved in manufacturing, production, processing, basically transforming raw materials or components into new products.
So factories, production lines.
Exactly. Textile mills, food processing plants, chemical or pharmaceutical manufacturing, metal fabrication, making equipment or engines. Anything involving actual production, sorting, assembly, packaging on an industrial scale. It's a key part of the UAE's economic diversification strategy.
I saw Dubai splits this into light and medium industrial. What's that about?
That's mainly about scale and potential impact, based on factors like the size of the facility needed, the type of machinery, potential environmental impact, or risk level. It helps tailor regulations and maybe zone requirements.
And getting one, I'm guessing this is a much heavier lift, financially and logistically.
Oh, absolutely. It's a significant commitment. For a mainland industrial license, forget virtual offices. You need a physical office and a dedicated warehouse or factory. There's usually a hefty minimum capital requirement, often AED 250,000 or more. Plus, typically a minimum number of employees, maybe 10 to start.
Wow. And ownership. Still need a local partner here.
Well, historically, yes, the 51% local partner was often required for industrial on the mainland. But again, that FDI law likely opens the door for 100% foreign ownership in many non-strategic industrial sectors now, too, though it's crucial to verify for the specific activity.
Okay. And the paperwork must be intense.
Very intense. You need detailed reports, factory plans, production processes, equipment lists, projected costs, financing sources, number of employees, a full feasibility study. And you need approvals from multiple ministries: health, environment, interior, sometimes others, plus the Chamber of Commerce.
Right. What about industrial setups and free zones? Any easier?
Free zones offer the standard benefits: 100% ownership, tax exemptions, often duty-free import of raw materials, and export of finished goods, which is huge for manufacturers. Capital requirements vary by zone, maybe AED 50,000 up to a million or more. You'll need at least one director with a residence visa. Some zones might have rules about exporting a certain percentage of your output too. They're designed as manufacturing and export hubs.
So the application process for industrial sounds like it takes a while.
It definitely does. Way more involved than commercial or professional. You're probably looking at 3 months, maybe longer, realistically. You choose your activity and location, get initial approval based on that detailed business plan and feasibility study. Then comes the rounds of getting no objection certificates, NOCs, and approvals from all those different ministries and authorities.
Okay.
Then the formal application. For mainland, you then have to actually build or fit out your factory, get municipality permissions, pass final inspections. Then you pay the final fees and get the license. It's a marathon.
And the costs. Beyond the huge capital investment, what are the license fees like?
The license fee itself might look somewhat reasonable on paper. Dubai Mainland, maybe around AED 25,000 on average initially. Abu Dhabi Mainland explicitly states that AED 250,000 minimum capital. Sharjah Mainland, maybe AED 7,000 to 25,000 for the license fee.
But that's misleading.
Totally misleading if you only look at the license fee. The real cost is vastly higher because of the mandatory capital. The cost of building or leasing and equipping a factory, getting all those approvals. You need very thorough financial planning. Free zones, again, package deals might range from AED 10,000 to 50,000 plus initially, but they can sometimes be more cost-effective to start an industrial setup, especially with those duty exemptions factored in.
So despite the hurdles, why set up manufacturing in the UAE? What are the strategic upsides?
Key benefits are access to really good, specialized infrastructure, often in dedicated industrial cities or zones. There can be government incentives too, maybe subsidized land or utilities, to encourage manufacturing. Plus, you get that 100% foreign ownership potential now, full profit repatriation. But, and this is critical for industrial, you must adhere strictly to quality, safety, and environmental standards. They are very serious about that.
Okay, that covers the three main types. But you hinted at it earlier, and it's a massive point. The total cost of setting up is way more than just the license fee, isn't it? Anyone planning this needs a proper budget.
Absolutely. Focusing only on the license fee is a classic mistake. It's often just the entry ticket. You need a really detailed financial projection. There are other government fees baked in, like trade name registration that's AED 620 to maybe 2,000 right there.
And the office space, that must vary hugely.
Oh, yeah. A simple flexi desk in a free zone might be AED 10,000, 20,000 a year. But a proper physical office on the mainland, easily AED 20,000 to 50,000 or much more annually. Plus, you'll likely pay a security deposit, maybe 5–10% of the rent, and fees for utility connections and municipality approvals, maybe another AED 2,000, 5,000.
Visas for the owner, for staff?
Yep. An investor visa might run you AED 3,500 to 10,000. Each employee visa could be AED 4,000 to 7,000. Plus medical tests and the Emirates ID card for each visa holder add another AED 1,000 to 2,500 per person. It adds up fast if you have staff.
And opening a company bank account. Any hidden costs there?
Not usually an upfront fee to open it, but almost all banks require a significant minimum deposit to activate and maintain the account. Could be anywhere from AED 50,000 up to AED 500,000 or more, depending on the bank and your business type.
Wow. Okay, what else?
Other potential costs. Notary fees for legal documents, maybe AED 1,000, 3,000, annual Chamber of Commerce membership, another AED 1,000, 3,000 typically.
Right.
If you happen to need a local service agent for a professional license, that's their annual fee, maybe AED 10,000, 20,000. And then the cost of hiring business setup consultants.
Which you recommended earlier.
Honestly, yes.
Yeah.
For navigating all this complexity, especially first time, it's often money well spent. Their fees might range from AED 5,000 to 15,000 or more for comprehensive service, but they can save you time, headaches, and potentially costly mistakes.
That really paints the full picture. So quick comparison. Mainland versus free zone costs overall. Is one generally cheaper in the long run?
Okay, this is a really interesting strategic point. Mainland setups usually have higher initial costs. Let's say 80, 35,000 to 65,000 as a rough starting range because of potentially higher office costs, LSA fees, if applicable, maybe bigger deposits.
Hmm.
But the annual renewal fees for mainland licenses are often significantly lower, maybe only 60, 70% of the initial cost.
Hmm.
So over several years, mainland could actually work out cheaper.
Ah, okay. And free zones.
Free zone packages might look more expensive initially, say AED 25,000 to 45,000 or more, but they often bundle in that flexi desk or office space, which is value up front. However, their annual renewal fees often stay quite high, maybe 80, 90% of the initial cost each year.
So you really need to model it out over a few years.
Exactly. Think a long-term operational cost, not just day one setup cost.
Great insight. And you mentioned that huge shift with the FDI law allowing 100% foreign ownership on the mainland for many sectors. That really blurred the lines. What about getting profits out? Repatriation, is that easy?
Yeah, that law was a game changer, bringing mainland much closer to free zones on the ownership front, at least for non-strategic sectors like, general trading, many services, some manufacturing, oil and gas, banking, telco. Those might still need local partners. As for getting money out, the UAE is incredibly efficient and transparent here. Zero restrictions on foreign exchange. The dirham AED is freely convertible. You can repatriate 100% of your capital and profits whenever you want. That's a massive plus for international investors.
And the tax situation remains a big draw, right?
Absolutely. That 9% federal corporate tax only applies to profits over AED 375,000. Below that threshold, it's 0% tax, which is fantastic support for startups and SMEs. Plus, no personal income tax, no capital gains tax.
And avoiding double tax.
Yes, the UAE has a huge network, like 143 double taxation agreements, DTAs, with countries worldwide. This helps businesses avoid being taxed twice, once in the UAE and again in their home country. It really smooths the path for international operations. And all this happens within a framework that, as we said, strictly adheres to global anti-money laundering, AML, and combating the financing of terrorism, CFT laws. That maintains trust.
Okay, it sounds incredibly appealing on many fronts, but let's get real. It can't all be easy. What are the key challenges, the sort of reality checks people should be aware of when setting up in the UAE?
Good question. It's vital to be realistic. Despite the advantages, there are definite challenges. First, those high corporate costs we detailed: setup, premises, visas, staffing, ongoing operations, they add up. It's not a low-cost destination overall.
Right.
Second, navigating the legal stuff. It is complex. You've got federal laws, specific emirate rules, different free zone regulations. It takes effort or expert help to get it right.
What about the market itself?
Fierce competition. Many sectors are pretty saturated, dominated by big players. Breaking in as a new entrant can be tough. Funding can sometimes still be a hurdle for startups or SMEs compared to other ecosystems. And don't underestimate the social and cultural adaptation needed. Business etiquette, relationship building,
Yeah.
it can be different.
And risks, like scams.
Yeah, like any major business hub, you need to be vigilant about fraud and scams. Doing thorough due diligence on partners, suppliers, even clients is just essential.
You hear a lot about hiring difficulties, too. Finding and keeping good staff.
It can be a challenge, yes. Even with a large expat workforce, specific skills can be in short supply. And labor laws, while designed to protect workers, can sometimes seem complex for employers regarding contracts, visas, termination rules. Retention can also be tough in a transient market.
Any other operational headaches?
Late payments, especially in B2B. It's a known issue. Average payment times can stretch to 70 days or more. So having a solid cash flow buffer, I usually advise planning for 90 days, is really important for survival. Also, that link between having a physical office lease and your license can be tough for very small businesses or startups, although free zones offer more wiggle room there.
Okay, and then there's the famous WASTA. How much does that personal connection factor still play a role? Is it like an unwritten rule book?
Ah, WASTA. Yes, it still exists. Personal connections, networks, relationships. While the system is increasingly merit-based and legal frameworks are strong, having the right connections can sometimes, smooth the path, maybe speed things up or open certain doors.
How does a newcomer navigate that?
It takes time, dedicated networking, building genuine relationships. Sometimes strategic local partnerships can help bridge that gap. It's a cultural dynamic to be aware of. And lastly, just the sheer speed of change here. Laws, regulations, market trends, they evolve fast. Businesses need to be incredibly agile and adaptable. Plus, be aware of the Dubai premium, a higher cost of living and doing business. Factor in amortization policies encouraging local hiring, and just keep an eye on the broader geopolitical situation. It's dynamic, yes, but complex.
That is a brilliantly thorough picture. Okay, so wrapping this up.
Yeah?
The UAE's licensing system is clearly sophisticated, constantly evolving, very strategically focused on attracting investment. That core mainland versus free zone split offers tailored options, although, as you highlighted, new laws on mainland ownership are blurring those lines, making mainland more attractive in new ways.
Definitely.
And crucially, the real cost goes way beyond the license fee. Budgeting for everything else is key. And while it's very attractive, there are real challenges: costs, complexity, competition, culture that demand serious planning.
Exactly. Meticulous planning is vital.
So for you, listening, thinking about this, here are some key takeaways, some actionable points from our deep dive today. 1. Get crystal clear on your exact business activity. That dictates everything. 2. Choose your jurisdiction, mainland or free zone, strategically. Weigh the pros and cons for your model. 3. Plan your finances comprehensively. Budget for all the costs, not just the sticker price of the license.
Crucial.
4. Seriously, consider expert help. Business setup consultants, legal advisors, they can be worth their weight in gold. 5. Invest time in understanding the culture, including dynamics like WASTA. Maybe look into local partnerships. 6. Stay agile. Be ready to adapt to change. And 7. Compliance, 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 especially things like AML/CFT laws. Build on a solid legal foundation.
Sound advice. And maybe a final thought to leave people with.
Go for it.
Given how fast the UAE is changing its business rules, especially around foreign ownership and just making things easier, how might this continue to reshape its position on the global stage? Could it pressure other regions to change their own investment rules in the next decade? And maybe more tactically for you, the listener, what hidden opportunities might pop up for businesses that really master both the formal rules and those cultural nuances in this incredibly vibrant, fast-moving market? Something to think about.